Our top story today, futures pairing gains this morning as hotter than expected inflation data continues to dent hopes that the Federal Reserve will cut interest rates in the coming months. Wholesale prices jumping 0.6% on the month. That was higher than the 0.3% forecast. Meanwhile, retail sales rising 0.6% month over month compared to an estimated 0.8% increase. We have got team coverage with Yahoo Finance's Canal and Josh Schafer. Josh, let's begin with you on retail sales, please.
Yeah, Jared. So taking a look at retail sales, I think the big story here is just that we saw any sort of a rebound. We saw the number get revised down in January to minus 1.1% was that January number. So to see some level of a rebound here, I think it's just a positive sign when you think about the consumer still being in good shape, and especially with what Ali is about to talk about on the inflation front. I would say a number that it's good that this number wasn't much higher. I think we'd be starting to get to the point where people are getting concerned about economic data perhaps coming in too well with some of these inflation prints that we're getting.
Yeah, certainly. And Josh, to that point, and Ali, to bring you in here on the conversation, there's a lot of focus on these PPI prints over the last several months because of what it really tells us about the overall inflation picture. And taking a look at this print, the Fed still has, looks like, a longer way to go than maybe even the street is realizing at this point.
Yeah, and the producer price index, it measures the cost of goods for those producers. And similar to the consumer price index that we saw earlier this week, inflation continues to remain elevated. According to the data, producer prices are at 0.6% in February over the prior month. The expectation is that prices would hold steady at 0.3%. So PPI coming in hotter than expected and hotter than January's results, excluding volatile categories like food and energy, because we do know that gas prices were elevated for the month of February. Prices did rise 0.3% month over month, but that was also hotter than expected. It is a deceleration from January's 0.5% monthly gain. And then on a yearly basis, PPI final demand coming in at 1.6% hotter than January's 0.9% rise. So the Fed still has its work cut out for it. But I am looking at what the markets are pricing in right now. They are still very firm on a June rate cut. They're still very firm on 3 cuts coming this year. I think next week, if we're going to be receiving the Fed dot plot, if there's any continued movement there, that could have a serious reaction on the markets. But if that comes in as expected, if there's 3 rate cuts that the Fed thinks are coming, if there's 3 rate cuts the market thinks are coming, that's ultimately going to be a good thing for stocks. And, we are seeing treasury yields go up a bit higher, but stocks futures still in the green right now.
Yeah, the market hearing what it wants to hear, or taking a look at what it wants to look at here within these reports. Yeah, just another day, and it's the same sort of narrative here.
Yeah.
Stocks usually go up. All right, guys, thanks so much for breaking that down.